Get everything rolling. Change the thumbnails around, do all the YouTube things. Make sure we are running smooth. Thumbnails around. Oh, there's me talking to myself. What's up, you guys? Welcome to the stream. I see a bunch of you guys already in the chat here. Hello, hello. I'm just making sure the thumbnails changed here. For some reason, I got to do it like manually each time. It's a little bit annoying, but it's okay. What's up, everybody? Welcome, welcome. Happy to have you guys here in the chat with me. We've got a whole bunch of you guys. Mabel, Samarth, Ish, Rohit, the King. What's up, guys? Welcome, welcome. Happy. What is it? It's Wednesday today. We've got some special stuff to look at today. Things are really moving, and we had some news today. I think we should probably start with news today. Let's actually look at forexfactory.com. Going to pull this up and show you guys what we had in terms of the CPI numbers, which was the hot topic of the day. So we are looking at USD CPI numbers. Now, what is CPI? Well, CPI basically stands for Consumer Price Index. And you know how you got US dollars or you've got euros or pounds, whatever you're using for your currency? Well, that has a strength to it, right? It has a purchasing power. You know, 50 years ago, a slice of bread or a loaf of bread cost you like cents, right? Whereas now a loaf of bread might cost you $4. So it's a difference because over time prices change, and that is due to inflation. Well, the consumer price index is a measurement of inflation. So that's naturally going to be a pretty big deal in terms of markets. So we actually had better than expected numbers here for the CPI. Now, this is sort of an interesting one because higher CPI, you know what? We're going to actually read about it because it's a little bit easier to understand when we read about it. So consumer prices account for the majority of overall inflation. Inflation is important to a currency valuation because rising prices lead central banks to raise interest rates out of respect for their inflation containment mandate. Okay. Little bit confusing for the new guys and girls out there, but let me just explain this simply. If prices are rising very quickly, it means a lot of times that consumers are out there buying, right? That's a good thing for the economy. And a lot of times what that could lead the central banks to do is say, okay, let's slow down that growth. We don't want to grow too fast. We also don't want to grow too slow. There is a healthy middle ground for any sort of economy, and the Fed knows this. So if consumer price index shoots up, and it's looking like this today, where we've got an actual number of 0.8 relative to the forecasted 0.2. That's a pretty big difference. And so that is actually sort of bullish for our dollar pairs because people are saying, oh, well, that might mean that the Fed might need to step in here and actually raise rates sooner. Raising rates, if you're a stock trader, you know anything about stocks, has to do, well, it's kind of like a dividend. So if you're looking at a stock that offers a dividend, right? If they offer you more of a dividend, you probably want to own more of that stock, right? Because that stock's going to pay you something just for holding on to your position. Well, it's similar to US dollars, right? The US dollar oftentimes shoots up because the yield going higher means that there's more yield on bonds, there's more yield on different things that are being offered, and that is attractive to investors in the market. So this is really impactful. So we're taking a look here at USD Jpy. I want to show you guys what we've got going on with the dollar. So there's the news today, spiked up, rallied really hard there on the news itself. You know, all USD pairs are actually moving across the board. We actually saw some Canadian pairs as well. Sure enough, I care about that because a lot of you guys probably know I'm in some Cad trade right now. But anyways, so dollar yen, I wanted to point out something for the traders out there focusing on dollar yen. You've got this little downtrend here. Notice how every time price rallies, you basically get this little bit of a sell-off, right? Price runs up, sells off, price runs up, sells off, sells off, sells off. Well, with this news, it's going to be interesting to see if this has the potential to break this downwards pattern. So let's look at this from the perspective of the bulls. If you're bullish on USD JPY, probably what you would love to see if you're looking for a breakout is to see this level here on the 1 hour chart get cleared. So what I'm going to do is I'm going to mark this zone right here. So we would identify this as a supply level, right? Why? Because every time that price has recently been holding this area, it's been a level of resistance, right? So anytime price runs up there, kind of a sell. But if we can get news that's strong enough to push us outside of this little pattern, break us from the downtrend, start the structure break here on the upside, then that very well could be what we're looking for more upside on USD Jpy. So when I'm looking at this, I'm saying, okay, well, if we get a break and a retest, maybe there's some room for higher prices on USD Jpy. So that's what I'm focused on when I'm looking at this pair. I just wanted to share that thought with you guys this morning with the news. Let's look really quick. We'll switch over to DXY. This is the dollar index. And when looking at the US dollar index this morning, you can see some interesting stuff. We spiked up into what was a previous level of support. And look how quickly prices fell. This is really interesting. So there's been a lot of bearishness on the dollar recently, a lot of concern for the US dollar, and you know, it's concern for, you know, headed lower. One of the big reasons is, again, there's a lot of money printing going on. There is a lot of concern about inflation. High levels of inflation does tend to cause the currency to devalue. And the Fed has also sort of been saying, hey, you know, we're not trying to raise rates anytime soon. That's pretty bearish, right? Because when the Fed says they're not looking to raise rates and the currency is sort of being printed quite a bit, it's a little bit concerning for possible upside going forward. So it's kind of interesting because you actually see the news came out. It was considered bullish for the US dollar and then very quickly found a lot of sell pressure there on the retest. I want to show you guys before we get too far the trade that I've got currently on CAD Swiss. You can see here it is. I took a buy last Friday right around this area here. Since then, things have been going really well. I wish every single trade was this good, but it was a really nice mover here on CAD Swiss, and also sort of benefiting from the same news this morning. I was actually watching it as the news came out and saw CAD Swiss spike up to these levels. For my friends out there who are inside of the private group and keeping an eye on CAD Swiss with me, the big thing that I'm looking out for is this zone of resistance here on the 4-hour chart. As price runs up into this zone, I have moved my stop up a bit here just because, you know, let's say that this zone just holds really strong and sellers just run this thing down. I just want to jump out of the trade. I've had a great run here on CAD Swiss the last few weeks. I've taken a lot of different trades on the long side, cashed out one trade last week and then took another one towards the end of the week. And so far this week, things have been really good on CAD Swiss. But if prices start to rebound, if prices start to reject this zone here up at 0.75, then I'm going to quickly jump out and take my profit and look for another opportunity to maybe trade something else. This is the only trade that I've had open this week. It's been a slow activity-wise week. But from a perspective of just taking a one good trade and letting it do its thing, it's been a pretty good week. So just sitting here and letting that one do its thing. So just playing the patience game. With that said, that is CAD Swiss. As you guys know, if you want to see any of my trades, I share all of them inside of the private group. Win or lose, I do not win every single trade. It is not always so great, but we definitely have been catching some really good trades recently. So if you have any interest in joining the private group, there's a link down below in the description, and you can find out information there on how to join us. Okay, so with that said, that's Canadian dollar, Swiss franc, but I do have one that I want to show you guys. USD Cad might be one to watch today with everything going on with the dollar. Look at that, rolling over, CAD strength still winning here and pushing the dollar against the Canadian lower. In fact, it's so sold off now. I think we got to restart some of our levels of supply and demand because they're so old news now. Look at dollar CAD. Dollar CAD just has no rebound anywhere in this level. We can see this is the only bounce that we've seen. That would be a pretty good example of a dead cat bounce, right? You've got just a barely moving back price before a drop lower. So again, dollar CAD looking super bearish here, and I have no interest personally in buying dollar CAD anywhere near these prices. You know, if anything, if I'm looking for a buy, if I was to buy dollar CAD, I would have to see something, you know, start to show me signs of strength. I would need, you know, some serious movements higher, something like that, where I could maybe even conceive looking at the idea of going long on something like dollar CAD. Again, the thing is, when you have such a strong downtrend, it's an uphill battle for price to ever really strongly rebound. Now, it will at some point. There will be another day where dollar CAD is rising. But for the current situation, for me, the easiest path is just the path of least resistance, which is just going with the market's dominant energy. And since 2020 has sort of all that volatility has sort of subsided, since then, we've just been on this gradual decline on the dollar versus the CAD, as the dollar has been printing quite substantially, and the Canadian dollar, which is a heavy commodity-based economy. They have tons of lumber and oil and lots of natural resources in that giant reserve of theirs, right? That has really benefited the Canadian economy. Now, here in the Southeast US, we actually have a shortage of gasoline right now. Actually, it's like really hard to find gas, which I don't know if that has direct impact on dollar CAD. I mean, obviously, we get a lot of our oil from various places here in the Southeast, but again, it probably can't help that there's a shortage here in a lot of the southern states in the United States right now. So that would cause supply to be low, demand to be high. We know that the Canadian dollar is heavily impacted by oil prices. So let's actually look really quick, just because that's sort of pressing. U.S. oil still moving higher here. This thing has been just a rocket ship for the last several months. Just wanted to look at this one and see what this is, what this one's up to. But you can see, there's the top there, coming into contact with that right now. And a big one for oil, for the people watching oil, would be to see if we could break through this one higher. If that happens, honestly, there's no, when I look at this and I say, oh, well, does it seem high? Sure, but it doesn't mean it can't go higher. People probably thought it was high here, high here, right? So it's one of those things, just playing the slow game. Let's go back to currencies for a moment, though, and I want to take a look at pound dollar with you guys and see what's going on with this guy here. So pound dollar is a really interesting mover right now. We've got GBP USD throwing up here to the high side and almost back to the previous top here at around 1.42. So 1.42 is the target here, at least for probably a lot of the bulls out there. And this is really starting to break out of all of this range activity that we've seen on the pound dollar for the last several weeks. You can see back earlier in 2021, start of 2021, we had a massive run up on the pound, really saw some strength there. And then we entered into a consolidation phase where, we had some sellers and just back and forth motion. But where we are currently at with pound dollar, I've been bullish on this currency pair. I did not take this trade, unfortunately, but, definitely was bullish throughout this period of time. And still think, honestly, that the pound dollar has more upside, especially with that recent bearishness on the US dollar. I think a lot of these crosses against the dollar have a lot of potential. Another one we'll take a look at is going to be AUD USD, or the Australian dollar. We might take a look at that one today to see if there's any setups there. But for my traders, my friends out there, taking a look at the pound dollar, let's just look at it from a lower time frame. Look at this news that we had this morning. So numbers came out, like I said, for those of you guys who are just joining us a little bit later in the stream, we had CPI numbers come out today. I'll pull those up one more time just as a refresher. So the CPI numbers came out. So they were expected to be 0.2%, and they actually came out as 0.8%, which was better than expected for the US. Now, what I was saying just a minute ago is that these numbers came out very positive. So why are prices reversing? Well, one reason or argument that I would make is that, okay, yes, we had strong USD numbers, which means that for GU, strong numbers would mean that we would expect GU to come down, right? We'd expect something like this and maybe some continuation. Well, the news came out and it was bullish for the dollar, but then shortly after has been reversed even more so than where it started from. What's that all about? Well, there's concerns with the US dollar with inflation right now. That's like the highlight of the concern for the bulls out there watching the US dollar. Is there's a lot of money printing going on. We're trying to, stimulate our economy just like everyone else, but we're doing a fair job at printing a lot of money. And so, there's an argument for money printing. There's the whole purpose is to try and, to to bring enough stimulus, bring enough business and economic activity back that it overall starts to pick up. But the problem is when you print a lot of money, what happens to the currency? Well, the currency naturally will go down over time when you have printing of a certain currency. It's kind of like if you had, if you had Bitcoin and then they doubled the amount of Bitcoin. The way Bitcoin works, I'm pretty sure that's not possible, right? They have to like mine it, and everybody's doing that anyways. But let's just say, for example, that you have one Bitcoin at $60,000, right? You have one Bitcoin at $60,000, but then they double the number of Bitcoins. Suddenly, overnight, your one Bitcoin went from 60K, it got cut in half, and now you get 30K, right? And that's the idea of inflating the prices. Another time that this happens is in the stock market. Sometimes new shares will be offered on a company that's hurting, right? So maybe like a small company will have to issue new shares. They'll sell more shares in their company. That sort of dilutes the price of the shares, and it also makes investors concerned. But anyways, back to currencies for a moment, taking a look at the pound dollar here. Why is this thing reversing? Well, there's a big concern and big fear right now about the US and the inflation that's going on. Every country is sort of printing money right now, but others are doing it at a slower rate. Some are doing it at a faster rate. And so although CPI is high, that's sort of concerning in terms of inflation. But at the same time, the reason that it's not, in my opinion, like super bearish right now, the pound dollar, is because although, yes, there was some good inflation numbers, the Fed has sort of been really, really tough on they don't want to raise rates. And if they don't want to raise rates, then it kind of just means, oh, there's a lot of inflation going on and they're not going to raise rates. A lot of times what happens is inflation, a high level of inflation, causes a central bank to say, let's go ahead and raise our rates so that we can, not inflate our currency too much and slow things down and keep them steady, right? Well, if the Fed doesn't want to raise rates, yet there's inflation going on, that's double negative, right? You have no higher rates and you have more devaluing of the currency. So that's my take on it. I don't know. Maybe I'm right. Maybe I'm wrong. You guys know I'm not an economics professor. I just know this stuff as I am literally just a person who likes this stuff a lot. So I've learned all this stuff on my own through YouTube, through, some of the courses that I took in college. But for the most part, I like economics is a very, very complex thing. It is just a piece of the trading puzzle in my view, but it is a driving force. So understanding why this move is happening is kind of important. So let's take it back to the 1 hour chart for just a moment here. Still looking at pound dollar. For pound dollar, I think that we probably are still headed up to that 1.42. So like I mentioned, I think we want to complete the prophecy, if you will, here a little bit. We've had this high on pound dollar form right around 1.42, right? We had this level here, price shot up to this and found some seller's resistance. So after this consolidation, I think a natural place for price to want to go with this breakout is probably a move up to 1.42. I still think that there's upside for the pound. Now, the second thing I want to say is that take a look at this idea here. We may have some pullbacks, we may have some processes along the way, but I do think that should we start to see, moves up to there, that maybe we make a break at some point here and continue higher. So the natural flow of an uptrend is we know that it makes higher highs, higher lows. Well, pound dollar, although it's been a bit choppy, is still generally following that pattern. Here's a high, here's a low, here's a high, here's a low, here's a high, here's a low. Let's see if we can get another higher high. Another higher high is still healthy for this uptrending concept that we have here on the long-term charts here on pound dollar. So that's my thoughts on pound dollar. While we're looking at the pound, let's look at pound yen. See what this one's up to. Gbp Jpy, switching over to this chart. Look at this one, which has already broken its previous top. So you can see we formed a top there at 153.25, let's say, right here. And with this recent bullishness on the pound, we've actually seen price break through that level. So this is an example of a supply zone getting broken. And then look at this. Price breaks through the supply zone and then immediately retests it and treats it as demand, right? So it's kind of like it broke through it, bounced off of it. Very, very common thing to see in markets especially when you have a strong uptrend like this. So, when you get these sort of moves past levels of resistance, that's sort of like it's like a checkpoint. If you guys ever played like a video game where like you get to a certain point in the game and then, if you die, you still go back to that point. It's like a checkpoint. Well, that's kind of like the concept of supply and demand for my gamer friends out there. But hopefully that's a good analogy for some of you guys. Good morning and good afternoon to all my friends out there. I see a lot of you guys in the chat. I have not been good with the chat today, so I just want to say, if you're in here and you're watching with me live, thanks so much for showing up and being a part of our community here on YouTube. Some great questions and some great conversations as well going on. So definitely appreciate that. I see you guys saying gold. We will get to gold. Don't you worry. John says, I jumped into Aussie Yen at 84.9 7 hours ago, managed to survive the flash stop hunt, still in and hoping it's still good for the long-term trend. Let's look at Aussie Yen. So again, we had news this morning. So it's not necessarily like a flash, if that's what you're talking about, but let's see if that actually happened. It did happen a little bit here on Aussie Yen. Aussie Yen, also, so when you get big numbers like in the US, like you get inflation numbers or unemployment numbers, it does have an impact, even though neither of these currencies are impacted by the US dollar directly. The Aussie Yen, right, is still going to keep an eye. People who are in Australia and Japan are still going to keep an eye on major economic news in the US. So, we do see a little bit of a spike there. It did have some sort of meaning. It was due to the inflation report numbers that came out in the US, which were a definite big difference than people were expecting. So when I'm looking at Aussie Yen, we'll just take a look at it while we're here. I do like this currency cross. I'm bullish on the Aussie and bearish on the Yen. So this would be one that I personally would trade if there was some good setups. Let's see. Let's just start fresh here. So when looking at the Aussie Yen, seems like you've got some resistance here, right? The previous top. You've got a nice little uptrend forming on this chart here. And overall, this thing is fairly bullish. We'll just add some moving averages as well just to see. So you can see this is, I know one guy who would love to trade this would be Joe inside of the private group. Joe is one of our coaches, and he loves to trade the higher time frames when things are lining up with these moving averages. He's a fairly simple guy, and he likes the simple concept of when you have a healthy trend like this, where you have multiple moving averages lining up. This is the 50, the 100, and the 200. So when I'm looking at this and I'm saying, okay, we're on the 50, the 100, the 200. The cool thing here is that you've got them all lined up. So when there's a very strong demand for a market, we usually see this happening. We see the 50 above the 100, above the 200. When we go back to a time where it's not so clear, you get stuff like this where it's a bit mixed, right? Let's see if we can find a good example. Yeah, look at this. So during this time, look how undecisive. You've got all the moving averages just kind of all over the place, even going backwards at times, right? So you've got these moving averages doing some weird stuff back here. And then, once a trend really starts to develop, usually you start seeing stuff like this, where you get to see, moving averages moving in confluence together. And so I know Joe definitely loves to trade those sort of concepts. You do see these lining up nicely. So if you do get a pullback, somebody send a message to Joe and let him know that Aussie Yen looks interesting. But I think a pullback to somewhere like this could be due for a good buy setup. As you guys always know, this is not financial advice, as it's indicating on the bottom of the screen there. But with that said, with Aussie Yen, I would say, it does seem like we've extended a bit here, and it probably is due for a bit of a pullback. But the flip side is that if you start to see the breakout, if we get a big fat up candle, there is no like requirement that says, oh, Aussie Yen can't go higher. It's just that we're at a level, it's like a barrier, right? If we can break through that barrier, then by all means, we could go higher. Ivan D in the chat. What's up, Ivan? Ivan is, he was on our stream yesterday. So start 2 demo accounts, trade 1 strategy per account, and see which performs better. Test, test, test. I love that tip from Ivan today. Thanks very much for being in the stream today in the chat and for being on camera yesterday. That was awesome having you on. We've got another guest coming today at just about 30 minutes from now. So if you guys are sticking around for the day, hang out with us. We got another guest today. And of course, you guys will see Ivan back on the stream for sure. Who's Joe? How do you not know Joe? Happy day. You've been in the stream all the time. Joe is, I think you do know who he is. Joe is one of our analysts inside of the private group. He also does live streams for people inside of the community and answers questions, coaching calls, that sort of stuff. Took a buy on GJ. What do you think? We just looked at it, Soy. We actually talked about GJ just a few minutes ago. I think I'm bullish on the pair, but I got to find a setup that really fits me if I'm going to get in long. But again, looking very, very clean to the upside here on Aussie Yen. If anything, I'm looking for opportunities to get long on some sort of discounted pullback. Let's look at AUD USD while we're at it. AUD USD. We'll type that one in. Pull this guy up. So this one, kind of an interesting currency pair. And you know what? I pulled this one up just for Ivan because he seems to love this currency pair. Every time you know I was on the stream with him, seemed like he spent a few minutes taking a look at AUD USD. So let's see if I can give you guys my take. I'll start fresh with this and just give you guys what I'm seeing on this currency. So let's pull the moving averages off for just a moment and look at this thing structure wise. So the thing with Aussie dollar is that it is, in my view, it's headed higher over the longer term. I think that this thing has more upside. It is a commodity-based economy. And in today's world right now, that is doing very, very well. You've got places like Canada as well doing big things because their economy is so based around oil. Oil is growing in demand right now. Things churning back and coming back to life. So when I'm looking at AUD USD, I see this area here on the chart as a pause. Not as a, oh, it's going to reverse, even though it could. I'm not saying it's impossible. I'm just saying I don't see this as like, oh, it's going to reverse. I see this as a pause before continued upward pressure. Ivan made a good example the other day when we talked about Aussie dollar together. Last Friday, we talked about it and he said, why am I trading the chop? And I definitely relate to that. And I'm sure some of you guys do as well. There are times where Aussie dollar, look at this. Beautiful move. If you're in this trade anytime during that on the long side, you're having a great time. Like, it's hard to mess this up. If you're in this thing and you're long, I mean, it is hard to mess this trend up. I mean, unless you are just absolutely buying here and selling here, buying here and selling here, which I guess, I don't know, some of you guys might be able to do consistently, but that would be like impressive if you were able to buy the absolute high and sell the absolute low. But for me, I think that, waiting for these opportunities to set up on Aussie dollar again is the ideal scenario. So in this time, absolutely love a pair like this. During this time, I still like Aussie dollar, but I'm just being a little bit more patient. I'm saying, okay, well, I don't like all that. I do like that, right? Don't, obviously don't like that. And this is hindsight, right? Because you don't know when it's going to chop exactly, but it's a pretty good idea. You get a pretty good idea when you start to see structure really getting broken out to the upside. So for example, let's say on Aussie dollar, we've got some pretty clear previous high resistance. I do think that this level will get retested. I think that at some point, 0.8 is in the books for Aussie dollar. And so when I'm looking at this, I think your biggest barrier to that is this level here. We had a stab at trying to go higher. We did try to break this, but we did not successfully hold it. So what actually happened is we had a nice little rally. Price made its move, paused here, tried to shoot past it, came back down, and has not been able to get above it. For me, something like this, if it were to stab up there again, hold it for a minute, give it a shot here. We're looking at the daily charts. So this is a bigger picture, but something like this, right? You've got some demand here. I want to see, if you're very bullish on the Aussie dollar, there might actually be even a trade on the pullback here. Let's look at that idea really quick. So, if you're throwing in a simple trend line here, you've got this idea here. If you're very bullish on the Aussie dollar and you say, okay, I do think that it has another chance, we're forming those higher lows. There is demand here on this chart, or at least for the time being. If you're bullish on the Aussie dollar, something like this, looking for that push higher, to me, those are setups that I really like on this pair. Like I said, my idea is that at some point, I think we are headed back to 0.8, probably by the end of 2021. Hopefully, maybe even past that point by 2021. But when I'm looking at this, I'm saying, okay, when I'm looking at AUD USD, I'm saying a pullback to this zone very well could be worth looking at in terms of a buy setup. On the 200 moving average, which is a moving average that I like to use, it's nothing magical. It's nothing fancy. It's just a simple moving average. It's telling me that the longer term charts are bullish. There is demand for this market clearly to push it and keep it above this 200-day for this long. The Aussie dollar was like the #1 currency pair performing in the last year against the dollar, at least, or of the majors, right? I think a close second is maybe the Canadian dollar at this point. But when I'm looking at this, when I'm looking at AUD USD, like I said, the major setups that I see are a pullback to this trend line and looking for this level here to really hold. If we can get something like this, hold that area, pull back to demand, looking for the run up to 0.8. I like that setup a lot, and I think that that has potential. What do you guys think? Are you guys bullish on Aussie dollar as well, or do you disagree with me? What do you think? While you guys answer that, I want to show you this. Let's head over to the website. This is free to use anytime you guys want. Just head over to Retail Forex Sentiment. I want to show you guys this. So we pulled up Retail Sentiment, and this is going to tell us what average traders over at myfxbook.com, what their holdings consist of on any currency pair. So if I look at the euro, for example, right now, very, very short bias. A lot of people are short on the euro that are retail traders. Remember that retail traders mostly lose money. 95% of traders in general lose money. So going with them is sort of a little bit of a dangerous task, but it's not always right, but generally I like to be on the side of the minority on this category, not in the majority. So when I'm looking at AUD USD, we've got about 60-40. 60% of traders are short on this market, and you've got about 39% of traders long. So if anything, that sort of lines up with my bias here. You got a nice little pullback, right? Nice little pullback to demand coming in play. You've got most retail traders betting on it to go lower. I would be more interested in saying, okay, that discount looks pretty good. What do you think? Ivan, do you agree? Ivan's the AUD USD trader in the chat, so we gotta get his approval, if anything. Ivan, it's been awesome having you on the stream, man. People really, really liked your content, so I'm looking forward to having you back on soon. No opinion on that pair, says Happy Day. Overall bullish, but short-term bearish till the trend line. Already bearish on GU, so I'm happy it's moving in my direction. Any comments on the oil shortage currently? Yeah, I can't get gas. No, in the southeast here, there was like a hack where actually right around where I used to work, and it's like some sort of pipeline hack with oil. I don't know enough about it. Maybe you guys in the chat can give us more information. What I do know is that there's a shortage of oil right now, or the pipeline. And so it's been a little bit tough to get some gas going here around where I live. So hopefully that changes, but it is a bit concerning. And I was mentioning earlier, I wonder if that has any impact on oil prices globally. I mean, it probably does as well, like some level. Cartel stealing oil? Who knows, man? Maybe. Long-term bull, says Phil. I'm with you, Phil. I'm the same way. 0.78 was a good support and a buy as a buyer. So what's 0.78? 0.78 is right here. Yeah, I like that zone too, right? Lower time frames here on the 4-hour chart. We'll see. I like this a lot. I think that if that breaks, another level to at least argue about would be this one. We could debate this one today. If price breaks there, could be an interesting one to look out for. 0.77 is your next level there. So yeah, that's AUD USD. Let's look at gold. I know you guys want to look at gold, so we'll switch it over. XAU USD, and we will go from there. All right, so let's pull up gold here on the chart. Gold has been in a consolidation phase here. And as you guys know, consolidation does not necessarily, like I mentioned just a minute ago, consolidation does not mean it's going to reverse. It does not mean it's going to continue. It just means that price is battling at a certain point. So when I look at gold here, zoom in just a bit, we're looking at the 4-hour chart. And what you notice is you've got price just sort of halted at this spot. So yesterday we pointed out that it looked like there may be a head and shoulders forming, right? You had your left shoulder, head, right shoulder, but then price didn't really go anywhere. It didn't really move any further. So with today's news on the US dollar, I'm sure that we got a bit of a spike. Let's look at the lower time frames here. Yeah, so you had a spike up and down on gold, kind of doing all sorts of wacko things. So we had CPI numbers come out this morning. They were higher than expected. However, the Fed has been really stubborn on the whole, talking about raising rates. So if they're not willing to raise rates and inflation is high, it's a little bit concerning. We're going to have to talk more about that sometime soon, because that's a big deal that they, inflation is sort of rising, but then they're we're not going to raise rates. If that changes, if they raise rates, then by all means, I might switch back to being a bull on the dollar. But for now, I'm neutral / bearish. So when I'm looking at gold, if I'm talking just purely against the dollar, it does look pretty bullish right now. However, we've looked at the COT reports a few times, and let's do that again. Let's pull up the COT on the website. Again, a1trading.com. You can use this anytime you want for free. And let's look at the gold market really quick. All right, so gold, non-commercials. And we can kind of see all of 2021 has been fairly bearish for demand by big institutional traders on the gold market. So when you get this sort of scenario where gold is, in heavy demand in 2020 because people are afraid, people are unsure. There was a big demand, and this is where it's kind of weird to me, because it's like, okay, well, we have concerns about inflation, yet we're not seeing a huge demand for gold yet. That arguably may be because people are selling their gold in favor of bonds, right? There's an age-old argument between bonds versus gold, right? And with bonds yielding something now and seeming to rise, people might be saying, bonds are better, right? Why would I hold a rock when I could hold something that pays me every year? That's the idea, right? When you take a bond if you buy a bond, the idea is you give money to a government, to a corporation, whatever, and they pay you a yield on your money every year. And that's sort of like a low risk, relatively speaking, a lower risk investment. And people are saying, why would I buy gold, which yields nothing per year unless it goes up in value? Or I could buy bonds, which could go up in value and yield something every year. So that's the sort of, safe haven argument, bonds versus gold. So we're seeing that happening right now. Again, with yields and everything rising. Look at that. My collar's been messed up this whole time. You guys didn't tell me? I can't trust you guys. My collar was like this. Anyways, so looking at gold, like I said, not a super bull for me. I know that there's a lot of people out there who are very bullish on gold. And it's not that I think it can't go higher. I'm just saying that with the COT reports not reflecting huge demand from big traders, it's a little bit back and forth, compared to something like the pound, which has had pretty steady demand on the COT report, which I'm pretty bullish on the pound, right? You've had a nice little overall increase. Now we've had flat times recently, but again, overall demand for the pound from institutional traders. So I like that. That's what I like to see. Let's look at the Australian dollar while we're looking at the COT report. This one also had a nice little steady demand, although it doesn't seem as much of demand as the pound. Still, the idea is the same, right? You've got some demand from institutional traders there. Okay, so with that, let's go back over to the chart. Get gold here a little bit closer. For my friends watching gold here on the lower time frames, you know, watch the break of this level. If you get a move past here, if you shoot up here and you get something like that, maybe we're headed higher. But I do think that we're sort of at the upper limits of where I was, you know, thinking gold could go. So let me look at this on the daily chart with you guys. So since 2021 has really gotten going, we've just seen really a lot of sell pressure from gold. Gold started out here right around this level here, start of the year. Since then, it's recovered, but it's still down 3.5%. At one point, it was down 12%, let's say, just about. And then since the all-time high here at 2,075, we are still currently down by 11.5%. And at one point was down nearly 20%, 19%, let's say. Adolfo says, do you use psychological levels? Yes, I do, generally. You know, if you have something big like this, 1850, for example, was my target on gold for this move up. I didn't have a trade, but I was just saying, you know, if price goes higher, I think the natural place for it to go would be 1850, which lines up, yes, with a psychological level, right? 1850 is a key number, but also with this overall trend to the downside, right? Depending on how you drew this trend line, you could argue we're getting very, very close if you draw it along the tops, right? Getting very close. And then you've got this counter trend move here to the upside like this, right? You get some demand, 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 demand. Question is, as we tighten here, are we going to break lower or break higher? It's going to come down to news. It's going to come down to what happens. But again, either ways, there may be some great trade setups to look out for and try and, you know, trade the retest, trade the breakouts, that sort of thing. Patrick says, why doesn't the subscription accept MasterCard or Visa? It should. We use PayPal. So if you don't have PayPal in your country, that might be an issue. Depending on where you are in the world, some countries don't have access to PayPal. Like, for example, I think, is it Turkey? Turkey might have limitations on PayPal, but certain countries don't have access to PayPal. So if you're having an issue with payment and you're looking to join us, you can contact us on our contact page. If you just go to a1trading.com and head over to the contact section right here, you can chat with us anytime you want. It won't be me, but it will be somebody who's here to help you. So with that, like I said, gold, if anything, when it's rallying up like this, I would just be cautious as a buyer because you're sort of working with the counter trend. Even though it's working out nicely right now, you just got to be careful that the, you know, when the train ends and we get the overall downtrend to continue, if it does continue, you just got to be out of the way because that thing could head right on back down to 1680 and renewed sell pressure could even lead us to fresh lows for the year or maybe going into next year. Do you accept crypto? There's all of our information on that is inside of the group, or not inside the group, inside of the website. If you go to the contact page and ask about crypto, there is a way we can do that. So yes. So that's what I'm thinking on gold, higher time frames. Just be cautious with sellers looming up here at 1850, I would say. We'll see if that level holds or if price breaks out. If price breaks, then that would actually be very bullish, right? Because if you break this level, then that tells us, hey, you know, there's enough demand here to just exceed supply completely and may be ready to rally to our next level. I would say that if gold really does break 1850, if I'm wrong about this, I would say that the next level would be all the way up just around 1950, which is $100 higher on the price of gold. So we'll mark that down just in case, you know, price does get super bullish on gold. Like I said, I think that next level would be 1950, and from there, of course, 2050, going up by hundreds here. Right? So that's what I would say on gold. What's this SPY doing? We'll look at the SPX 500 today. I would like to also quickly look at Bitcoin just for my friends out there who watch crypto. So look at this. The SPY is doing some interesting stuff. So this is the US stock market. And by the way, you guys, if you see this market drop, if you see the stock market drop, it does have a lot of impact on currencies as well. You will usually see a lot of the more risky economies move a little bit closer to the S&P 500. So for example, the Australian economy, which is still a major economy, but it is not as major or not as big as Europe, US, Japan. If the stock market comes down hard, it actually has the potential to really weaken the Australian dollar as well, because their economy is so closely related to trade, to all of that, right? So we're looking at SPX 500 here. Can we get that changed on the chat? There we go. Perfect. Yeah. So looking at SPX on the 4-hour chart here, you've got some nice levels of demand here, a couple different times where price did rally. But watching this here going into the rest of the week and even into next week, if this price level breaks, could spell some downside for SPX 500. So this is the stock market. And really, you know, if you're looking at like a 50% retracement off of this level, if this price breaks, right? If that level breaks, this is the 200 SMA, and you've got demand here as well. If that breaks, sellers could take price down to the 50% retracement, but even further, honestly, it looks like we could make a move down to 61.8. You've got a nice little level here. And depending on how you drew this, let's see, if you drew the fib like this, for my Fibonacci extension and retracement traders, we'll draw this one. Look at that. So 50% retracement lines up perfectly with this bigger term move. So if we break this level, for sellers out there looking for short-term moves, maybe a move down to the 50% retracement could be in play. That would be a little bit concerning for the stock traders out there, the stock investors. We could definitely see some pullback there that could be pretty nasty. But if that gets going, you can see, what are we at? We are currently at a, you know, just 2.5% off the highs. A move to that point would be a 6% drop from the high on the S&P 500. Dave is upset about the 830 move. Yeah, that was the people who spiked it were just people watching the CPI numbers. We had inflation numbers come out. Yeah, if you straddled this morning, that was ugly. So apologies or sorry to the people out there who straddled. If you don't know what straddling is, it's where you essentially say, you know, let's say you're looking at this right here and you're saying, if it goes up, I'll buy stop. I'll use a buy stop. If it goes down, I'll sell stop. Some people like to do it. Some people do it successfully. But on news events, spreads get nasty. And when you get something like this on the news, that's ugly, right? Because you got a buy up here, a sell down here, and you're sitting there holding on to a big loss. And if it rallies hard this way, you'll make some money on the buy, but you'll lose more on the sell, right? So you don't want to be in both. You want to be in just one or the other. But again, when you get those big spikes like that, you get triggered into both. Nick, check your CAD situation, says Ryan. Okay. Is it good or bad? Fingers crossed, right? Look at that, you guys. Cad Swiss doing its thing. Awesome. Up just over $2,500 there on Cad Swiss. I'm filming this one. Do you guys like those live trading videos? They're a lot of work. Like I have to come back and, you know, constantly be updating the position and sharing a video. But if you guys like them, I'll keep doing them because I do enjoy doing them. There's just a lot of work. But yeah, Cad Swiss here just running up $2,500. You know, I initially only risked 500 on this trade. So that's a very, very good mover there so far. That's what, a 5-to-1. That's pretty insane. Yeah, you guys like the live trading videos? Cool. That's good to hear. Yeah, I mean, the disappointing thing is like a content creator sometimes is like, you know, we'll put in a lot of work behind the scenes putting together a video and it'll get like no views, no interest. And I do measure, you know, my videos based on views. I know that, you know, there's topics where I know they'll get less views, but they're important or helpful to somebody out there. And I appreciate that too. But generally, like if you're the content creator, you put in all this time to make a video, to film it, to coordinate with our editor who's behind the scenes, right? All of that work, and then it gets no views. That's always a little bit disappointing. So it's always cool to hear when you guys really like a video, because then I'm like, okay, cool, I'll do more of that. Because then I get to do something that I enjoy, but also you guys benefit from, that also sort of is actually really worthwhile in terms of getting lots of views for the channel. And that's the reality too, is, you know, this channel is not free to run, and all the stuff that we do costs money. So anytime we make a video, there's hopefully some sort of return that we can get on an ad revenue. Usually the videos break even in terms of like what it costs versus, you know, what the ad revenue generates, except for the big ones. Some of the big ones have done really well. But yeah, so when I'm looking at CAD Swiss here, honestly, I might move my stop if price really keeps moving. But where I'm at, for you guys in the VIP group, I updated my position this morning. I have a stop loss locked in here. We put in, you know, we're tagging this upper limit here of the previous high. If price can break there, then that would be awesome. That would be the best case scenario. If we can break through the highs and keep running higher, I will have no problem continuing to hold on to my position. Although, not gonna lie, I'm a little bit like, ooh, I want to take profit. I'm gonna play the patience game, stick to my strategy, which tells me a winner, you let it keep running. You can see we've had a couple great trades on CAD Swiss recently. Lots of different, you know, here's one that I took a loss here. So there was a loss. So let's look at it. Here's a loss, a win, and a win. So CAD Swiss has been a good one for me recently. Really, really liked this move. So yeah, when I'm looking at this, when I look at CAD Swiss, like I said, if I can get a break above this, then I'll probably trail stops higher and try and see if we can get that to keep running higher. Someone asked me if I would add to this position. I probably will not. I will not add to this position. I'll just let this one run because it's been such a massive, I mean, these green candles are beautiful right now. So I'm just letting it do its thing. I'm not going to touch it. I'm just going to let it either trail me out for a profit there with the stop loss or run higher and keep going. Are you interested in USD Swiss? Not as much, Jared. Good question. So Jared asked if I'm interested in dollar Swiss. Recently, the US dollar has been pretty bearish and the CAD has been my favorite. So I've talked all about that inside of the private group. I've mentioned multiple times that I'm switching more to looking at CAD pairs and pound pairs recently. And that changes week to week, month to month. So as always, you guys already know, if I take a trade, if I share it, it goes right out to members inside of our private Discord in real time. So, by the way, if you do want to join the private group, there's information on that down below in the description. You can check that out. And again, there's a promo code there for you as well. Look at that, just really running there on CAD Swiss. 1 hour chart looks fantastic. We'll see. We'll see if it can keep going or if it's going to trail me out. Either ways, I'm happy. So just letting it do its thing. In just a few minutes, you guys, we have a guest joining us. His name is, actually, you know what? Maybe I'll leave it a surprise. He's a long-term friend of mine in the markets. We've done a few different content pieces together. You guys have not seen him on the stream here before. It's his first time showing up to the live streams. We've done a video in the past together, but we're going to have somebody join us in just a few minutes. He's going to share some stuff with us in the markets, and I'm super excited to see him. So if he's watching the stream chat, then I'm ready for you. I'm ready. I'm excited. Let's look at just a market or two more before we have our guest join us, and then we will go from there. Let's see. What do we want to look at? You guys got any recommendations? It's not Frank. Good guess though, Dade and Denise. It's not Frank. He's camera shy, you guys. That guy's a writer. You guys can read from Frank, but he's tough to get on the camera. I mean, he does fine when he's on the camera. He just doesn't love to be on camera, which a lot of you guys might relate to. You know, it's not for everybody being on camera. Let's see. Yeah, how have we not done Euro USD? Let's look at Euro Dollar. Pulling up EUR USD. Look at this one today. So Euro USD doing all sorts of crazy stuff here. And let's take a look at this. Okay, so Euro USD, Euro Dollar. On the 4-hour chart, we came into a pretty big level of resistance here. You can see you have this price back here was big sell-off in this region. And sure enough, price still holding resistance here. I mentioned that I had no interest in selling this right now because of my mixed sentiment there on both the euro and the US dollar. I'm not really, you can see for a while I was trading this thing, right? You'll see usually on my charts, because I'm logged into my broker, you'll see like, oh, I was trading it back here, and then I just like stopped. I took one loss recently, and then, that's like the only trade I've taken in a while. Took some here, took some there, short there, long there. That didn't work out. So loss, win. That was a loss because I was short. This was a loss because I was short. So 3 losses, 1 win. All of the losses here were small, fortunately. But yeah, this one's not been as good of a pair for me lately. So when I'm looking at this, when I'm looking at Euro USD, my favorite things here are just, range bound, if anything. So I don't really have a huge opinion on the Euro USD. If anything, I would probably be slightly bearish bias, but it's just tough because the US dollar right now, with inflation and all the concerns around it, I do think the US dollar has more downside. So if anything, I'd probably sit back on the sidelines. But if I'm looking at this thing from we'll just start fresh on this. If I'm looking at this on the daily chart, big picture, we'll just mark some levels, talk about this. Okay. We're just doing all our level marking. So there's where we had that sell-off. Look at that. I got stopped out right before it rolled over. That's painful. But let's see. Okay, yeah. So these are the main levels that I see right now in Euro USD. Looking at it from a big picture, like a daily chart view, you've got nice sellers up in this region here. So, obviously we see just recently we saw fresh sellers come in, push price lower. I think that, this uptrend, although, it's sort of a counter trend to this bigger move, it just depends when you're looking at it. Because if you go super far back, right, seems like we're in an uptrend. And then if you look here, seems like we're in a downtrend, right? So it's a little bit confusing. So when I'm looking at this with the recent little uptrend that we've had, it does seem like this is the first time where sellers have really, I guess besides this point, these 2 points seem like where sellers got strong. Both of them happened right around the same spot. So it seems like this area, 1.215, really got some fresh, some interest from sellers. So if price pops up there, if you're a seller on the Euro USD, keep an eye on that because it seems like a pretty good strong point for sellers watching this. On the flip side, for people who are looking for long setups on the euro, if price rallies lower, if we keep going lower, maybe there's some good pullback opportunities. Let's see if we can draw a fib here. Yeah, look at that 38.2. That's pretty interesting. If you're bullish, if you have a bias to the long side on the euro dollar, check this out. 1.2 looks real interesting, actually. Round number. So the person who was mentioning round number plays, you got a beautiful round number. Pull back to the 38.2% retracement. And a couple different times where price bounced off this level nicely. So is EU a sell? So I probably wouldn't sell it. Like, even though, like, I would sit out. So there's other currencies that I'm more interested. I mentioned earlier, I like the pound and the CAD on the long side, and I'm short biased on the Swiss franc, the yen. Those are like my favorite currencies to be playing with right now. Euro USD, not so much for me. So I'm sitting out on the sidelines. But I would say, from just a technical analysis point, you got some interesting levels here and here. If you're a seller, if you have a sell bias in the euro, yeah, this level looks pretty interesting for sell pressure. Like, I'm not telling you, like I said, as always in this stream, I'm not telling you what you should do with your money. I'm just sharing, my opinions. And when I look at this, I'm saying sell heavy more on the upside here and buy heavy down here, because I don't have a strong, decisive, oh, I like the dollar over the euro, or I like the euro over the dollar. I'm pretty mixed on both right now. Right? Nurse makes a point, says there are a lot more viewers than likes. Can my man Nick get a few likes? Thank you very much, Nurse T. Appreciate that. Thank you so much for supporting the content, you guys, just by being here. It does mean a lot. But if you would, definitely make sure to like down below. It does help a lot. And as Nurse T kindly puts, make sure to push that like and support the content that we've put out here for free. You guys get this stuff for free. There's a team of people that put everything that you guys see out for you. So if you do enjoy it, simple free thing to do is to click that like button and support the content. All right, so I think we have a viewer joining us soon. He's not in the call yet, but we will, as soon as he's in here, we'll pull him up and get started with our guest today. You guys liking the guests? I like doing the guests because I think it's fun to have somebody else's perspective outside of just my own. You guys probably get sick of hearing from me after a while, right? Cool. Yeah. So, okay. Yeah. So you guys like the guests? A couple people in the chat saying they like doing the guest things. Yeah. I enjoy having guests. I really do. It also is kind of cool because sometimes, you know, like I've been doing this for like an hour, right? So I've been on the call with you guys for an hour, and don't get me wrong, I love hanging out with you guys and I love doing markets and talking stuff, but it's exhausting. So at a certain point, it's nice to have somebody keep things going, because I know you guys want more content. You might be, maybe you're at work, or maybe you're doing your trading or whatever you're doing, right? And you just want that extra 30 minutes of content just going in the background. That's my goal, is to get guests that, you know, they bring some sort of value to the stream, like our friend Ivan, who's been on, and we got a list of people who we're trying to have come hang out. Christian says, stay hydrated. Yeah, I drink all my water. So we're running on empty here, you guys. Really cool to get other perspectives. Yeah, guests, I agree. Guests are fun. So in the meantime, is there anything else we can look at? I looked at a bunch. What about Cad Yen? I'm sure this one is just, look at Cad Yen, you guys. Cad Yen is just insane, man. This thing has just been probably one of the best performing currency crosses in the last year, if not like the best. Maybe the only one. Maybe Aussie Yen is doing better. Let's actually do an experiment really quick. So if we go from the bottom of 2020 to the top here, it's up 22%, 23%, let's say. I just want to cross it against Aud Jpy and see if this one's better or worse. Nope. Okay. Wow. Look at that. Aud Jpy up 42%. This is probably got to be one of the best currency crosses. Wow. Yeah, that is nuts. Absolutely crazy. Ivan asked, what is your breakthrough with trading? For me, the breakthrough for my trading. So I'm a computer science major. So like my background is in computer science and in programming and data and looking at that stuff. I'm by no means, don't hype me up, because I didn't do very good. I got like C's and B's in college. But I definitely started programming before I started trading, and I brought my coding with me to trading. So I started like building indicators and testing strategies. That was my start to trading. My breakthrough came through the same thing. After spending enough time, I realized, oh, you can make money, but it's not going to be overnight riches. It's going to come from consistently employing a strategy that has a slight edge over time. All right, you guys, we've got our guest here. So thank you for being patient with me and sticking around. We're going to invite him in here. I'm very excited to see my friend. He's been on with us in the past. And here he is, Any the Knock Trader. What's up, man? How you doing, bro?
So I can't hear anything.
Oh, you can't hear me?
Oh yeah, I can hear you now. All good, all good,
okay,
all good. Sorry about that. There's
there
technical difficulties. Technical difficulties.
Yeah, StreamYard is a new platform for us. We've just started streaming on it, but it's really cool. Like the ability, it's kind of like a Zoom call that's like a live stream, you know?
Yeah. Yeah, I haven't used it before. Never used it before, but hopefully it'll a bit more smoother next time I use it. But yeah, no, I'm here. How you doing, Nick?
Yeah, man. What's up? So all the way from the UK, right?
Yes, the UK, London.
Yeah.
Sunny London once every blue moon.
Look at that. See, I've got all these American trading friends, and here we finally have someone from the UK. After all, Forex is like biggest in London. So
yeah,
what's up, Any the Knock Trader? What's up, my friend? How you doing?
I'm good. I can't complain. Doing all right. What about you? How you doing?
I'm good, man. It's been a minute since we did some stuff back in the day together, and I always just really enjoyed your content and your take on things. So I figured we'd just have you call in and hang out with us for a minute.
Yeah, no, I appreciate it, definitely. So, what are you looking at today? What are we looking at?
So I was looking at the. I saw, by the way, before we jump into the charts, I saw that the Knock Trader, my friend here, he does some stocks and he does some Forex. Is that right?
Yes, I've been doing more and more Forex recently, though. But yeah, I do look at stocks as well.
Okay. So you're embracing your European side of things, where you got more Forex. Here in the US, it's the flip side. It's like some people do Forex, most people do stocks. I feel like in the European region, it's like more people do Forex, some people do stocks. Is that right?
Yeah, no, it's a bit of a mix, but yeah, it's really big in the Forex game in the UK. Yeah, there's a lot of Forex traders here.
Got you. Okay. Yeah.
I think maybe because of the time zone. So
yeah, that makes sense. Are we getting a little bit of delay?
I don't know what's going on.
There we go. I think it's better now. Maybe.
I think there's a little bit of lag.
Yeah, it seems like a little bit of lag.
Yeah, I'm all good.
I think. Can you guys?
Let me try something.
Okay. Yeah. No worries. Yeah. So
we good now?
I think so. Yeah. There we go.
Yeah. Okay. Cool. Yeah.
Okay. Awesome. Yeah. So yeah, I think like in the United States, it's definitely like we had Happy Day said I think it's 90% stocks and 10% Forex. Dude, I think it might even be in the United States. It's like 5% Forex, 95% stocks. Like stocks are like the big thing here. So I don't know. I wonder how that is in different places in the world.
I think also because maybe as I said, I think it's mainly to do with the time zone here. I think that's we can really take advantage of all the different sessions a little bit easier than you can do in the States. And also you guys have a bit more access to way more stocks. Well, we have access to a lot of the US stocks as well, but there's way more market coverage in terms of the amount of stocks, especially with that TD America trade and stuff like that. So yeah.
Yeah, that makes sense. Yeah, so I was looking at we did a couple different things. What have you been looking at? If you can actually share your screen if you want.
Sweet.
Yeah, it's just there at the bottom of the screen.
Okay then.
And then Miles can bring your screen into view once it's up there, and then we can see what you're looking at. Because we've gone through a bunch of different things on my side. We looked at the pound pairs today. We looked at the CAD pairs today. A little bit of the Aussie as well, and just went through a whole bunch of ideas. So we'll see. We'll appreciate the fresh take.
Cool.
There we go. Okay, so you're popped up on the screen there, and you have control. So what are you looking at?
Okay, so what I'm looking at right now, I've been using a combination of recently. I've changed my strategy slightly to a bit of combination of smart money concept with a bit of retail as well, retail trend lines. And I've seen on. Let me start with the Nasdaq. So what I'm looking at here is there was a big sell-off, big sell-off, and what I saw here was okay. So let me give you an example of what I mean by smart money concept and retail. So, for example, previously here, I took a really nice advantage of this bull flag, and I managed to get a really pinpoint entry here based off of order blocks, and then I rode it up based off of with bull flags. If you go from the base to the entry, you can basically tell where your take profit is going to be, and look, lo and behold, it went through. So I took advantage of that here, but that's just give you an example of what I do. So I use retail strategies just to see where my exit is, and I use smart money concept to pinpoint my entry based off of order blocks. So if you look at the higher time frame on Nasdaq, this just looks like a real big impulsive move. Oops, something's tagged me out. Real big impulsive move,
right?
And then it stagnated here, made a double top, and then it sold off here. Now, if you refine this, so this is like the daily order block, and if you refine it down to the 4 hour or even to the 1 hour, what you get here is a really refined entry point here, so around the 1290 mark. So that's the order block at which the impulsive move started from when you refine it down. So what I'm looking at now is potentially I've set a limit order here, and hopefully it taps in and then starts climbing up. Now, I don't really expect it to go all the way to the equal highs, but that's just where I've set my limit. But I would like for it to see a price to come in here and then tap up.
Got you. Yeah. So tell me about the order block for a second, because I know Bart, he does some work for us at A1 Trading. He likes the order books as well, but I've never really like tapped into them too strongly. I do look at like retail positioning. Is that kind of what it is? Is it like based around retail positioning, or?
So order blocks are based off of, I'm going to butcher it a little bit, but order blocks are basically, it's like a footprint of the last bits of consolidation before impulsive move that was caused by institutional order flow.
Got it.
So this big wick here, all the retail traders in the world, well, maybe all of them together could probably make that happen, but for the most part, this is institutionals driving up. So this little bit of this little bear flag right before this little bearish candlestick right before the impulsive move that caused a breaker structure is a footprint of liquidity that hasn't really been grabbed yet. And you know, as we all know, liquidity that hasn't been grabbed, they always try and find a way to go back and grab it before making a move to the direction they want to move. So it could just break through it. That could happen, but for the most part, there's always there's always a chance that you can retrace back to an order block by seeing where it's broken with an impulsive move, and it goes back to the first bullish back candlestick in the case of a short, and bearish candlestick in the case of a long. Does that kind of make sense?
It does. Yeah. That's actually really interesting. That's thank you for explaining that. You explained it very well, actually.
Oh, thanks. Thanks.
Yeah. So you're looking at the Nasdaq. What else is on your radar, I guess?
So Euro GBP is another one. I've got like an alert set here, and this is kind of similar setup, but what I like to see is like really obvious impulsive moves, so that I know that there was institutional involvement. So from here, price came down here. Now, if you look at the weekly chart, you have to really be careful here because it's pretty much a bearish move up until this point. But this impulsive move kind of broke up to the upside. It didn't break structure here, but on the daily chart, it did break structure because that was a break structure here.
Right.
Yeah. Okay, so that means this is now bullish on the daily, even though it's bearish on the weekly. And another good thing is that you can see that there's equal highs here. So that needs to be taken out at some point. It doesn't necessarily need to be now, but that's just another adds to the kind of storyline that I'm trying to tell. So now price needs to come all the way back down here, which it most likely will, because this is basically a whole area of inefficiency. There was no pullbacks pretty much. It was just straight up. So whenever there's inefficiency, a lot of times price needs to kind of grab that inefficiency before it decides what it's going to do next. Now, kind of like the other one that I showed you with Nasdaq, you refine, and then if you refine, you can go down. I'd put like a little line here. So that's like a refine down to the 1 hour. So then when I go back to the 4 hour, I would say, okay, so when it taps in here, I would then make a decision as to whether I want to take a long. I normally don't really set limit orders. I'll let it tap into the zone, and then I see how price action behaves within that zone to see if it looks like it's going to make a reverse on a bullish move, or if it's just going to break through.
I'm the same way. I like to. I actually don't use limit orders very often. For some reason, I just feel more comfortable when I take the trade in that moment after up to the second. I know okay, what's been happening in the world, what's been going on with price in this zone, and then I make my decision with market orders. So I'm definitely with you on that. Some people love limits because it makes it so you can walk away. But
now sometimes it's good to take limits because mate, I need to tell you about this one. This haunts me to this day. Bitcoin. I saw I see like a falling wedge on Bitcoin as well, but that's I'm not as privy to take these trades because Bitcoin's so bullish that most likely this might be a fake out and it's going to go up. That's what I think is going to happen. But if you go back way back, where was it? January, February? Yeah. So there was a point in February, I believe, where Musk was just like, he was just basically pumping Bitcoin, just doing everything to pump Bitcoin. And I can't remember where it was. I think it was around here. I think, yeah, Musk was pumping Bitcoin hard, and this was like a really good impulsive move, kind of like similar to what I was saying before, impulsive moves. And I marked up the chart here, but I should have set a limit order. I think I should have set a limit order because I was ready to take a long here, but then I think it just got away from me. I don't know what happened. I might have just missed it or something, but
yeah,
I believe it tapped right into exactly to the zone I wanted. Was it? I don't know if it was this one or something else. Might have been something else.
Yeah, I know what you mean though. Like,
yeah, it wasn't this one. There was another one. I think I've got it on my channel somewhere. But yeah, there was one moment when Musk really really pumped Bitcoin, and then it tapped right back into the order block, and then it just shot up, and I was like, oh, I should have taken a risk, a limit entry. But
yeah, I like that concept a lot. I like that concept of, you know, identifying, because those strong candles are very, very interesting studies. Because, you know, at the same time, a strong decisive candle like that it could be considered like very bullish for the start of the move, or bearish for the start of the move when it first gets going. But like you said, a lot of times price does find its way back, retest that area, and you know, can be a good spot to look at again.
Like if you look at Ethereum, this happened recently as well. This only happened in April. I found another breakout and retest on the order block. See, this is great confluence between retail and smart money concept strategies. This is the type of trades I like to see, where I saw like a converging wedge. We all know about converging wedges now. Now, I wasn't sure whether it was going to break out to the downside or upside. The minute it broke out, I consider this an impulsive move because it's just straight up candlesticks, bullish candlesticks.
Sure.
There was the breaker structure here. So then forget about smart money concept. You just know that it says break, retest, go up, right? That's what we've been taught from wedge formation. But what the order blocks? Now, for the order blocks, this is the order block that caused the last bullish order block before breaker structure, and then it retraced back down to it before pushing up. So then you would have known to take an entry here as opposed to just taking an entry at the top, which is what retail strategy tells you.
Yeah, nice. Anything that, like, you know, even the smallest adjustments can make the difference between a strategy being very profitable and kind of profitable. So that's
exactly cool. So old me would have taken along like here, and then maybe set my stop loss here just so that it doesn't do a little fake out before going up, and then set my stop loss and equal highs, which is 3-1. But then with this strategy, I could set it here, and I set my stop loss a little bit higher because I know that the minute if it breaks any lower than the equal low of this, then that means that the trade is void because now it's bearish.
Got it. Yeah, so, very, very cool.
So then that's like 9-1 now instead of 3-1. So that's how I like to use a confluence of smart money concepts and retail break and retest, for example.
So did you take any trades on Ethereum?
Yeah, I took I didn't actually take this one. I took another one. It was a little bit earlier. I can't remember. Yeah, it was this. This is the one that I took. This is one that I took a while back.
Oh wow! Look at that.
Yeah, and that was kind of like, as I said, it broke, retested, and then I found like a Sorry, can you hear that?
It's not too much. It's fine.
Okay, so I found sorry, let me switch that off. I found what is it? Where is it? I found. Okay, I've lost my bearings now. Where is it? Where was that trade? Okay, so yeah, here you go.
There it is.
So this is another one. It's just a really good trade because it broke to the downside. It came back up, and then I saw it like I was actually initially it's not actually a good thing because I initially wanted it to do a liquidity grab up, but it didn't. It just made like a flat line here. It flatlined here, and then I went down into an even lower time frame, And then what it did was that it kind of did it. It gave me another confirmation by breaking out to the downside and then retracing up again. And then I took a short, and that was a really good trade of mine because I rode it all the way down.
Yeah, I was going to say that's the type of trade you literally like screenshot, print it out, put on your wall.
Yeah. That's one of my best trades. That's why I left it. I've left it there even though it was weeks ago. I'm just so proud
I've done the same thing before. I've taken like
because you don't really get many like those where you got the perfect entry, perfect exit.
Yeah.
Yeah.
That's funny how that works.
That was a really good one. And what are the ones I was looking at? I was looking at USD Jpy. This one, I think this was one that stopped me out. I had a limit order on this one. This one stopped me out just now. Yeah, so I was expecting it to sell off here.
Yeah, we had some interesting moves just today. With we had some news this morning that caused all the USD ones to spike.
I think the news just kind of destroyed all of the good setups that I was looking at, because what I saw was that on the higher time frame, on the 4-hour time frame, for example, there was like, let's go to the daily. On the daily time frame, price was just selling off, and then made a breaker structure. And then here, as you see, this is the first bullish candlestick in a series before the breaker structure. Do you see that?
Gotcha. Yeah.
So price retraced back down to it, but then obviously I super refined it because that's the daily order block. Maybe let me hide. Let me start again. So that's the daily order block.
Yep.
Because this is the breaker structure. And then I refined. So I went down to the 4-hour chart. And then here's a breaker structure within the daily. Went down to the 1-hour chart. And as you can see here, you were building like the story, that narrative now. So I couldn't really find a clear breaker structure because of this spike here. Right. So I just left it, and then here's where I took a short just because it tapped into the 1-hour order block within the 4-hour order block, and then I just rode it down, and then luckily enough, NFP went in our favor, and it actually carried on. Yeah,
that was a nice move there. So you were short at that time, were you?
Yeah, short. So
nice.
Yeah. So I took a short here. Well, I just took a short halfway between the order block because I couldn't find. The minute it tapped in, I just took a short, let my stop loss there, and then just kind of I rode it down to here. I didn't take it all the way down because I just thought, okay, this is a good place to take it because it's kind of like an equal low. So that was like a good trade.
I got a question for you. So when price comes back to that spot where you've marked the order block, when price comes up there, do you look for like confirmation on the lower time frames, or do you just take the trade there at that point?
It really depends on like the smart thing is to take lower time frame entries, but sometimes if you backtest certain pairs, like if it was EU, for example, I would have taken a lower time frame. But with USD Jpy, from my backtesting, I've realized that it just does it just moves illogically. It doesn't do any kind of like it does it sometimes, but it doesn't really do as much of those kind of step ladder behavior.
Right. Gotcha.
So if I was looking for that, I would have never got entry. So that's why I took it entry on the 50% and just kind of crossed my fingers because but it wasn't necessarily crossing my fingers because obviously the high time frames and the 4-hour, the daily, the 1 hour was telling me the same thing. But I wasn't gonna. From experience with this pair, I learned that I didn't want to wait for the 10-minute to tell me the same thing because then I wouldn't have entered. But in reality, actually, if you look at this, actually in hindsight, you could have probably taken an entry here.
Gotcha. Yeah.
That's in hindsight.
I'm a similar, like my style when I enter into a trade, I actually don't look for a whole lot of confirmation. Like if I identify a level that I really like, that's why I asked, like you've got this very, very sharp level that you've come up with, or not you've come up with, but the concept of, a key level that you're looking at. And for me, it's like if it comes back to that zone, for me, I'm focused on supply, demand, and just keeping it fairly simple. I'll take a level that I really, really like as soon as it really reaches that price point. So I just was curious. Everybody has their different takes. Some people really like confirmation. Some people don't. I'm curious, for those of you guys in the chat, do you guys use confirmation or do you not care for confirmation? I just like to see what people say in the chat. We'll let it run.
Confirmation is good though. Sorry,
on the right-hand side, you can see the comments on if you in StreamYard, up on the top right, there's a comments button. If you click that, you'll be able to see people's comments.
Okay. Then.
I don't know if you had that open or not.
Yeah, I didn't have that open. No,
okay.
Okay. Cool.
There you go.
Yeah. Yeah, a lot of people use for confirmations. I would recommend confirmations. Maybe it's my FOMO personality sometimes makes me want to just enter when, because in reality, that one, for example, that was a 5-hour trade. If I had looked for a confirmation on the lower time frame, and I do most of the time, but it's just because it was that pair. If it was one of the the GU or EU or something like that, then I probably wouldn't have would have looked for confirmation. But like for example, if I'd gone down to a lower time frame. You can see here that the like on the 5 minute there was like it broke down and then it retested that area. So you could have probably taken a short here and then set a stop loss really tight here. But obviously hindsight's a wonderful thing, isn't it?
And that sure is, right?
That would have been a that would have been an 11-hour trade.
Yeah, that's crazy. Yeah, I'm happy if I can even get, like, I've got one trade on right now that's like a 5-to-1, and I'm like thrilled. So if I can get a 5-to-1, I'm super happy. You know.
Yeah, no, that's it's weird because with these like smart money concept moves, you can really get like really high risk to rewards, but it's a game of inches, and that's sometimes the annoying part because you like I could watch this, I could mark this setup. From like, okay, so I would have identified the setup from April 13th. And if I missed those 3 minutes or so where it does that, then I missed the 11-hour because look at it, just, you know what I mean?
Yeah, right, exactly.
So that's why sometimes what I should do, and I keep saying this, but I should really take maybe half a position here and like that, and then take the other as a fine entry just so that I can get a bigger risk to reward. But as I said, sometimes it's just more psychological thing than anything.
Yeah, and that's the thing, you guys. For those you guys in the chat, that's a great point that Annie just made. Is like understanding where you struggle. Like sometimes people, I've had people say to me like, Nick, I hate when I miss the trade. I've got it all marked up, and then it gets away from me. And even understanding like, oh well, you could take half and half. You could take part 1 at a level that gives you good confluence, but then part 2 at a level where it's just like the perfect setup that you've been waiting for your whole life that rarely ever comes up. There's all different styles, and understanding yourself as a trader and really isolating where you struggle with. Like I personally really like, we talked about this.
So ask me how I determine my stop.
You go ahead. How do you determine your stop loss?
Go for it, sorry. Stop. No, yeah. Well, how do I determine my stop loss? I just always put it just above wherever the order block is in question that I'm trading from. So just give a little room for So in this case, this was the 1 hour order block. So I did it just above there, and I took my entry at the 50% of the 1 hour, and then for the 5 minute one, so for the 5 minute one here, I took it at so that would have been this would have been the order block in question, if you guys can see that. This one here. So then I would have taken an entry here and then set my stop loss just above it.
Gotcha.
But I didn't take that.
It'd be nice.
yeah. Hindsight.
Cool. Yeah. Is there any other major charts that you're looking at right now? Like currently anything going on?
I'm looking at, what am I looking at? Yeah, well, I said I was looking at Bitcoin. I said because I was making a wedge, but I'm probably not going to take anything because I just don't trust it. It's too bullish for me. So like normally when I see a flag formation, it's going to go down, it's going to come down again.
Sure.
But I don't know whether I'm a wimp or anything, but I just got a feeling this is a fake out and it might just go up.
Yeah, Bitcoin is so strange like that because it's like it's similar to like the S&P 500. I had a conversation with Frank who works with us, and him and I basically like came to the conclusion that like when the market is in like bull city, like when it's just like every dip gets bought, every single, day seems to be bullish. It's not that you want to be chasing or buying it, but if anything, I tend towards looking for long setups.
Exactly. Yeah.
Just like, if I'm going to take a long, that's the only thing, but I'm not taking a short, because it's just like it's so tricky until the market environment truly changes and you get some big fat move on the daily chart and things are like really changing. It's just hard in my view. Same with Bitcoin, S&P 500, and like gold, for example, when it's in a gold, a major uptrend. Those things are just tough to fight.
You're just going against the flow of traffic, and it just makes your job a little bit harder.
Yeah, definitely agree.
Yeah, gold as well is another one. I'm sure you've seen this as well. Gold, this little zone here. This is like once again, a daily order block. Here, and it looks like it might do a little bit of a reversal before. Gold is bullish, let's be real, it's bullish, but like obviously it might need a reversal. Once again, this is another setup that looks kind of like the setups that I look for, which is like a impulsive move, found its way to one order block, and then it'll probably fill that gap, come around here. So it might be, I think this is the area that I'm looking for, something like that, somewhere here. I'd obviously have to refine it a little bit more to make sure that but I think it's probably going to come down to like the bottom half of this, like somewhere like here, and then you might want to take a long from there.
Yeah, I like that a lot. Yeah, we've been talking about gold a lot on the live streams, and I've had a similar thought, like 1850 there, psychological level, nice little resistance there, and honestly, gold has been in this longer term, like super long term uptrend, somewhat long-term downtrend recently. Since about middle 2020, we started seeing gold just sort of taper out, start falling. I think that, you've probably got some sellers that are looking for opportunities to sell this rally. This rally, in my view, is still a counter trend until further notice. But like you said, if you think gold's breaking out, if you think gold is going higher, I love that little pullback to that structure point that you made there. Maybe from there, some higher positions from there. But I definitely agree. I like your thoughts there.
And if you see this recent low, I don't know if you guys use, I love a little bit of it's not really part of my strategy, but I like to see where it goes as well. The bottom was really identified by like this golden pocket. As you can see from the recent low to the most recent high, this was the golden pocket area. So that's where long should have been taken if anyone did take one. And now you still want to see it climb to at least maybe to equal highs in the long term if you just hold in, not like day trading and stuff like that, but something like something like the 950 areas where you want to take like a long-term swing if you want to hold it for a couple of weeks or something. If this breaks, then we got issues, but I don't see this coming back down to that anytime soon. And there's a lot of confidence on there. As you can see, this is a support zone. Just even if you ignore I know you like to just have like supply zones. I know this probably would have been a supply zone that you would identify just because of the amount of wicks that is pulled back from, and then also added confidence because of the golden pocket. Yeah.
Actually, I was looking at that 61.8 at that time. I took a trade on. I bought on the U.S. stock market. GLD is the ETF. I don't know. If that's
the ETF.
Yeah. So I bought gold in the form of an ETF. Right, not at the low there, but just around that zone. For that reason, I like the 61.8. I also, just as like a portfolio positioning, I just wanted to have a little bit of gold in there. So I bought some gold there, and so far it's doing well. But I love that you pointed out the 61.8, and I knew you knew that before you even drew it, because I saw the same thing. So very interesting.
It's always good to have a lot of confidence. I love when I see confidence. Like I know other strategies that I don't really use, but sometimes I just kind of play with it just to see if it has relevance. Because if several different strategies are saying the same thing, then we're onto a winner. So I think gold's going to pull back to this zone, and I want to take a long back to retest this area here.
Could be good.
That'd be a nice little hold for a couple of days or so.
Yeah, that looks like could be a good situation there for a pullback for the buy. Curious for the people in the audience, are you more of a day trader, more of a swing trader? What's like your average holding time? Because we've looked at a lot of different time frames. I just want to hear from you what you call yourself.
When we first met each other, I was holding for weeks, but I've changed my strategy as the markets have become a bit more crazier. So I'm holding for like days now, maybe a week or two. No, no more than that. Yeah, because I'm not. The time horizons that I used to have confidence in holding for have kind of deteriorated as the market has gone crazy and crazier. So I wouldn't consider myself a day trader, but I do take day trades. But I would still, I don't know. What do you consider 2 weeks a swing trader? I don't know. I'll leave that to the audience.
Yeah, I would say so. What do you guys think in the chat? Let us know. I would say, you sound about like me. I would call myself a swing trader. And, I won't usually hold something. The only time I hold something for less than a day is usually because I get stopped out of a loser quickly. That's about it. And
just as we're talking, look at this. This would have been a great area to short potentially for gold. It broke out on 10 minute. I see I'd already marked this up from a while back, but I just hadn't done anything with it. But it broke from this impulsive move, lingered and came back. And it's always around well, I'm in the UK, so 1:30 to 2 o'clock time that we can always find some sort of great reaction to a previous order block, because that's when obviously the most liquidity comes in the market from the US Open. So I always look at around 1:30 to 2:30 British time. I don't know what time it is in your zone, but
right around 8 to 9 a.m. US.
Yeah, and that's when you want to see a reaction to like So that would have been, I think this would, well, it's too late for me now, but this would have been a great place to short. I would have shorted it here, set stop loss just a little bit higher, and then maybe ride it down to here, somewhere like here.
Yeah,
so actually maybe ride it down to here.
You're looking at both ways. For those of you guys in the chat, this is exactly why we have guests on. You guys already know I'm a bit of more of a fundamental / technical trader, and having any here, you guys are going to get way more of the technical side. He's a very, very technical trader. I've learned a lot just from watching his content, and I do want to invite you guys real quick. Make sure you go subscribe, check out Any the Knock Trader on YouTube. He's got some great content there for you to check out. All you got to do is look up The Knock Trader, and you can definitely subscribe to him. And if you want more technical stuff, like I said, he's there for you.
Cheers, Nick, man. Thanks for having me. And if you check out my last video, it was a month ago, but I'm trying to send out, I won't call it signals, but like predictions, less frequency and with higher success rate. The last thing I called out on my channel was the I'll just go back to the Nasdaq, was this ascending triangle, this bull flag, and I called it out when it was around here.
Very cool.
To ride up to here, and it was a big gain. It was a really big winner for me. So yeah, I try and give my some of my trade ideas and share with you guys, but I always try to share the most high probability ones on the channel, and then also just give some information on what's going on in the stock market, etc.
Awesome. Yeah, so lots of free value there over on the Knock Traders channel. So definitely go check him out. Make sure to subscribe. Maybe we can get you back in the future, Annie. I loved having you on and enjoyed having your perspective on things.
I appreciate it, Nick, man. I'd love to come back.
All right. Well, thanks so much for joining us. Again, guys, check his channel out and give him some love on YouTube. Thanks so much for joining us, Annie. We'll see you back next time, man.
Appreciate it, man. Cheers.
All right. Cool. All right, guys, that was some good stuff. So I hope you guys enjoyed hanging out with Any. Again, he's a longer term friend of mine in the world of markets. I've known him since I really started YouTube. So definitely very glad to have him joining us and hanging out and giving his perspective. What do you guys say? Do you want to have him back on sometime? We'll see if we can invite him back. Maybe even try and get him to come in like once a week or something, just like we did with Ivan. I think it's cool. I'm excited just to get more stuff for you guys. Like the end goal with my channel and the A1 Trading channel since the beginning has been to give you guys tons of free value, to offer you stuff that brings some sort of insight, knowledge, experience to you as a newer trader, whether you've been trading for 2 weeks or 2 years, whatever you're at. Our goal is just to give you guys more stuff to chew on and to help you out. So thank you guys so much for being here as a part of today's stream. If you did enjoy it, make sure to like down below and send us a message. You can contact us on our website. Send us messages of who you'd like to have join us in the future, and we'll continue to try and invite some guests and do some more stuff. With that said, you guys, my voice is about to explode, so I'm going to hop off here. Thank you so much for being here today. I hope you have a great rest of your day. Happy trading. Be safe out there, and we will see you back next time.